Hi everyone, welcome to Survey You. So today we're looking at Micron Technology. If you thought the gold rush for AI was sort of over because you have Nvidia kind of at an extremely high valuation and a lot of competitors slowly coming in, well, forget that. There is another sector that is going to perform really well, and that's RAM and storage. So early days, last few years, you had GPUs doing super well because it was the main performer when it comes to AI. But now that things are getting larger and larger, there's a lot of data to storage and process. It turns out the one thing that didn't get scaled properly was RAM and storage. So you're seeing all these companies that produce RAM and storage, they're doing super well. Like you look at Micron Technology in the last year and it's gone up 253%. And it's not over because the problem is not solved. So things continue to do, pricing continues to increase. It means whatever they're selling, they'll continue to make even larger margins. So you kind of get where I'm coming from, right? So AI memory sold out, causing an unprecedented surge in prices. So as we say, like prices for computer memory or RAM are expected to rise more than 50% this quarter compared to the last quarter of 2025. So you kind of see things are not slowing down. As you put right here, basically they were going to have extra expansion that was coming in at the end of 2027, and they've had to pull that to the middle of 2027 just because the demand is super high. Apparently for Micron Technology, they can only fulfill about 50 to 60% of the demand, which is crazy, right? So you kind of figure this company's in an extremely good spot. But the question is, after rising 250%, how much more can this company go? This is where we dive into the financials and the guidance, and then we get a really good idea that things are not at the end. And this company that trades just over $400 billion currently should, in a sense, go to $1 trillion because things are not slowing down and they're going to make extremely high profits going forward. So we look at revenues, and revenues was $13.6 billion. And a year ago it was only 8.7, so it's going from 8.7 to 13.6, and that's on the demand of what they sell, and also the increase of pricing as well. So all of a sudden the extra margin is really translating to the bottom line with income of $5.24 billion. So if you want to compare, a year ago they were making 1.8, and then all of a sudden it jumps massively to 5.2, and just a quarter ago, last quarter before that, was 3.2. So it is really jumping. These guys are consistently producing the same amount, but the pricing is just continually to jump. That just through extra margin that they're earning billions. And they won't see any expansion, like increase in output, until next year. So you've got this whole year where the pricing is extremely good. They do sign a lot of contracts, so they have said that the whole of 2026, all their product is going to be already sold. So it's all pre-ordered, it's all sold, and they will do really well this year in terms of what they have to sell. They've even withdrawn from the consumer market. So the AI kind of data center supply is basically, they're happy to supply all to the AI data centers because, there's a shortage in supply and they're giving the best pricing. That they've actually fully withdrawn from the consumer market. So it just tells you these guys are in a really good spot. So we look at the guidance. And the guidance is extremely high as well. It's at $8.7 billion. So to get an idea, a year ago at the same quarter, they were doing $8 billion. So over an $8 billion is jumping to 8.7. And last quarter, it was only 13.6. And that was up from a year ago when it was 8.7. So you can see, like, this is just continuing to jump, and these guys are still just producing the same stuff, right? So same stuff, but just super, super high pricing, and it's all under contract as well. So they will continue to produce this, and they will continue to make extra dollars just because of the better pricing. So they give diluted earnings per share. So this quarter they did about $4.60 per share, and they're expecting $8.19, which gives about just over $9 billion in net profit. So this quarter, the recent quarter that just passed, was 5.2, and it's all sudden jumping to over 9. So given this, all the pricing is going to be under contract, it's kind of fairly, in a sense, it would make a lot of sense if next quarters after that it's also going to be around 9 billion or so. So if we get the next, for the whole year, so say four consecutive quarters of $9 billion, just to make math simple, that would give you about 36 billion, and this would be a $400 billion company. So if we take, even a 30 to 40 PE, you can kind of do the math and you go, that's $1 trillion company. And we're not even sure if, that's just the end of the pricing. So they've also made an acquisition. Like, I don't know if it's on here, but they did recently just make a $1.8 billion acquisition as well. So they are continuing to buy more, and they're finding other ways to scale rather than trying to just build things from scratch. They're finding other ways to scale, which is through acquisitions. And it's a really good idea because they're making so much money that you might as well use it to continue to expand and do other things with it. This is a table that's just like summed up by ChatGPT basically, and we're basically, this is where the guidance is 8.7, and this is what they did a year ago. Compared to that, it was at 8 billion. So previously they were like 5, 6, 7, 8. The business had been increasing, but it hadn't been increasing at this rate. This current rate is unprecedented. And this year will continue to be super, super good for these guys. It's definitely, a stock to watch, or even a stock to just buy, because they're going to be making super good profits, and it's not expected to end until more supply comes along, because AI data centers are continuing to scale, get larger and larger, and they need more of this. So the shortage is not over. It's not going to be over for possibly 2 years. So this year is guaranteed that they're going to do really, really well in terms of it's just outselling everything they produce. I think this is one of the stocks that if you're going to invest in AI and you want it in a sense really safe, guaranteed, in a sense, returns, because everything's contracted, how much they're going to earn, and they potentially could earn even more if the minute extra supply comes along. It's going to be even at a higher pricing. So as you say here, like RAM is expected to rise more than 50% in pricing. So pricing was already super good, and it's going to continue to rise. And as you saw with the recent quarter, 13.6, that is because these guys are continuing to ink contracts for the spot pricing, and in the time they do the spot pricing, it's whatever that spot pricing is, and going forward as they ink new contracts, those contracts are going to continue to be even better pricing, and they're going to continue to earn even better net profits. So you kind of get the idea. So this year, I'd say it's pretty safe to look at a stock like Micron Technology and say, if you want to bet on the AI industry, this is a pretty good bet in terms of there's a gold rush, and they're the ones supplying the pick and shovels. And if you don't have a pick and shovel, you can't do much. So all the large companies are looking at this and going, we want to be the first ones to sign all the contracts for all the revenue, all the inventory that you have. and it's whatever pricing, because in terms of AI, there's so many hundreds of billions of dollars that it's just a crazy amount of money out there. And these guys are in the right spot, right time. The thing is, you just don't want to be near the end. If supply comes in, you start to fear, oh, actually, we don't want to be in the stock. But I don't think you have a problem to fear, at least not this year, because the shortage is to an extent that it's, the supply is not going to increase to that effect, because it takes years to build up these manufacturing facilities. So yeah, I think in terms of stocks, this one's, you really have to keep this one on your watch list, if not something on your portfolio. I think it will do super well. Just no doubt, in a sense. Like, we talk about Rocket Lab and all the potential, and they're flying into space, they've got Neutron, but then if they have any issues, then things change, obviously. And compared to Micron Technology, Rocket Lab's super risky, but Micron Technology, it's already got the facilities. It only has to continue to produce. Of course, if their facilities for some reason have a problem and it reduces their supply, of course, revenue profits are going to be down if there's any disruptions. But if there's no major problems, no disruptions, then they will continue to do well. And if demand is continue to grow, because basically there's nothing stopping demand from continue to grow, because AI data centers are basically going to continue to need even more. So as you see in this table here, we're in 2026. It's jumping. Next year it's going to continue to jump, and then in 2028 it continues to jump. So the demand actually isn't slowing down. So even though the increased supply is going to come in middle of next year, the demand is actually slowing down. So we don't even know if they'll even have enough supply when they increase supply, whether the demand can even be satisfied, because there's many countries, many companies, and they're all racing for this AI race. And demand is, everyone wants to buy off this company basically, but there is no supply left. So I think I rambled on enough about this company. You sort of get the picture. It's a pretty good safe bet in some sense, in terms of what they produce is pretty steady, reliable, consistent. They just have to continue to produce it, sell it, and the pricing is continue to go upwards. And I don't see there's in the short term, things look pretty good. Like 2026, this company is one of the companies that you really want to keep an eye on. And also, of course, there's all the other storage and RAM companies. Like, you look at SanDisk, and they have done super well. I think it was like 800% that the share price has gone up. So never mind Micron Technology going up 250%. That one is, they've gone up quite a lot more. But I like Micron Technology because the growth rate is much higher. The expected quarter with the guidance, compared to the year prior to that, is 130% growth. So if we looked at the quarters before that, they were growing really well, like 50%, but 130% in terms of revenue growth, that's really unprecedented. So I really think, especially this is a much larger company, and these numbers continue to, all the big companies want to do business with this big company, basically. So that's why I kind of find this one being really good. Of course, the other ones are really good as well. It's like, if you're buying a RAM or storage company, basically you can't go wrong in a sense, because there's not enough supply. So every single one of them is selling out. So hence why it's a gold rush. There's so much gold out there, and these guys are in the right place, right time. If you have any questions, comments, post below. Until then, good luck investing, everyone.